Hello and welcome to today's live webinar where we look at ASX investment opportunities in review. Any individual reading or listening should discuss with their financial planner or advisor the merits of any recommendation offer presented in this material for their own specific circumstances and realise that not all investments are appropriate for every individual. We have a special offer, so the technology that I'm using today is available on a 12-month subscription. It's $1,320 for the year. If you'd like to know more about that, please visit our website for a free trial or email me, or alternatively call the office on 1300 614 002. Moving straight into a graph of the XJO, and I guess one of the points to focus on is that across all major indices now we're under algorithm sell conditions. So when we look at the Dow Jones, the S&P 500, the Nasdaq and the XJO, the market has rebounded 50% of the sell-off in the December quarter, which the December quarter sell-off was one of the worst sell-offs that we've had since the GFC. So it's not unusual for the market to run into resistance at 50% sort of recovery of a prior sell-off. But what's critical at the moment is that there's a lower low, lower high structure across most global markets. Now, one view would be that it bumps along sideways, in which case an environment of selling call options would work well. The other is that it rolls over. Now, it would need, I think, a number of events to play out where, maybe the trade tariffs in the US become problematic again, maybe further government shutdown, further deterioration in China and knock-on effect into Europe. It appears that the US technology stocks that have been driving the market higher for the most part of the last number of years, you're starting to see some level of deterioration in the rate of growth there. And the outlook from Amazon on Friday night was probably softer than the market expected. Amazon fell 5%. So there's a bit of a bellwether there, I think, when you look across sort of what, Apple, even though it had a bounce, but, Apple did better than downgraded earnings. But I think across the US technology sector, we're seeing a number of sell signals there. So I think there's enough reason to just be a little bit cautious on valuations in high PE names, and that'll be something that I'll focus on as we go through today's recording. So just looking closer at the XJO, so you can see here we've had the rally from late December back up to roughly 50% undersell conditions. At the moment, we see resistance in the index at around sort of 59. We may see the US push 2 or 3% higher. That would push our market up to 6,000, but we're certainly within a range where we think the market struggles from here. In saying that, there's always individual opportunities to look at, and that's the purpose of today's recording. So let's click on the watch list. We go to the ASX 100. And I'm going to toggle through all of these, and I'll do that very quickly. Obviously, there's 100 stocks to get through, but part of the focus will be recognizing the names that are under sell conditions versus those that are under buy conditions, and identifying what will then become the high conviction ideas, which I'll update those notes and show you at the end of the recording. So let's start by clicking on the first stock in the list, Worley Parsons. Now, we're not doing anything there at the moment. It's under sell conditions, making lower lows, lower highs. Medibank, so this is a defensive yield name, roughly 4% dividend yield, but not much in the way of earnings growth. The stock got very oversold, and it was one of our high conviction ideas. To me, it's just back at fair value, and you're probably at a level where you want to look at selling calls over it. The range for Medibank's maybe 250 to 280. It consolidates, it moves sideways. You may remember that they lost the defense contract, which was worth about $30 million or about 7% of their earnings. So I'm not expecting the upcoming earnings result to do anything that sort of surprises on the upside there. Challenger, not there at the moment. CIMIC Group, so up against resistance, but CIMIC's in a space that we like. I think this sort of infrastructure theme you want to continue to think about having exposure to, but CIMIC's getting close to level now where you could consider selling covered call options over it. Caltex, under algorithm sell conditions, we last had the sell signal back here at 33, traded down to 25. We're now starting to see a recovery from very oversold conditions, but I expect Caltex to run into resistance again at around this sort of $28 to $29 level. So on the chart there, I've put the trend line there. So on your version, if you just make sure that show Leon's charts, that should be green on your version, and that'll put in place these support and resistance lines, and these allow you to sort of toggle through the charts and get a quick reference as to where I think sort of the market's heading. In the case of Origin Energy, it's under algorithm sell conditions. I've added this into the notes. I think this may surprise at the upcoming earnings result. We're seeing strong earnings from Santos, who operates at Curtis Island as well on the LNG plant there. Origin's next door neighbour. I think that bodes well for Origin's upcoming result, where we expect to see higher revenues from the dividends that Origin receives from that sort of 33 or 38% odd interest that they have in the Curtis Island project there. Well, I think they're partnered with ConocoPhillips, big US international energy company there. Whereas I think Santos might be partnered with Shell from memory. But point is, LNG delivery's been strong, prices achieved have been strong, so I think Origin surprises to the upside there on the earnings result. BlueScope, the only thing for me, this trades on a very low dividend yield, around 1.5%, and I don't think that really is supportive of higher prices at the moment in the market, so cautious there on BlueScope. Bendigo, so this Royal Commission hands down their final report today, and for that reason I think we just need to let the dust settle on these banks at the moment, but still under algorithm sell conditions. You can see there, I've just highlighted there's a price gap in Bendigo back up at say 11.47, but we'll just have to wait and see how this report is absorbed by the market. Insurance Australia Group, good support here at around $7. Owning it, selling 750 calls makes sense to me, I think. Domino Pizzas, I think, look at this on the short side. So we'll highlight, for the moment, I might just shift this up here as a reference that there's a price gap in Domino's back up to $54. Now, that's a long way from where we are at the moment, but I think this high PE, slowing earnings growth, I think this continues on the short side is where the money's made there in Domino's. Spark not doing there at the moment. Telstra starting to see a little breakout. It's the beginning of a higher high, higher low pattern, and the stock's rallied off that sort of 306 level again today, so that's looking encouraging for Telstra having to turn around. And we've obviously got their upcoming earnings result in the middle of this month. Downer EDI, resistance back up here between 730 and 750, and I think that's just the area where the market starts to take profit. The expectation is Downer grows earnings around 10 to maybe 13, 14%, which is very good relative to a market that's only growing earnings. So the ASX over the next 12 months will grow earnings about 4.5%. So it puts in the context the above average earnings growth that Downer's delivering. But there's no call options there. The stock's probably less than a 4% dividend yield, maybe about 3.8, 4% dividend yield. So I think it runs into resistance where it is at the moment. But certainly we're happy to take a look at again on another sell-off. Alumina, just highlighting that it's now under sell conditions. I think one of the areas of the market, if you sort of draw the conclusion that these indices are now bumping their head up against resistance, they're all under sell conditions. Where does the selling pressure comes from? At an index level, it has to be the banks and the resources. The banks are unknown whilst we're waiting for this report to be handed down and absorbed by the market. The resources have had a big rally, in particular iron ore, following the dam failure in Brazil. So we probably start to look for some resistance building in some of these resource names at the moment. So Alumina there around 250. Qantas, you've seen some level of deterioration in tourism numbers, higher oil prices, and I think Qantas is coming into a period where they're going to have to look at increasing capital spending, which I think all those events together will weigh on Qantas, and it's hard to see it rallying back up and making new highs. So I see that under resistance there at $6 and probably mostly trading lower. Santos, the energy sector's done very well as oils push back above $50, $55 a barrel. Santos again beneficiary of strong revenue numbers, strong dividends from their LNG investments, but at around 650 to 670 see Santos running into resistance. So I'll just again highlight, so there's a very small price gap there up to 680. Look for the stock to run into resistance. Look for these indicators to roll over, but certainly the potential for it to push another 20-30 cents higher maybe. Not doing anything there. Adelaide Brighton, not doing there. Oz Minerals, undersell conditions at the moment, so not doing anything there. Luca, undersell conditions, so again just highlighting the percentage now is increasing of the stocks that are under sell conditions versus buy, and the allocations probably, you know, something like 60-40, 60% under sell, 40% under buy. Woolworths is under buy conditions, trades on a high PE, very defensive, so owning it and selling tight covered calls makes sense to me. I don't think the upcoming earnings result will surprise to a point where the stock trades materially higher. I think that's just because it's already on a high PE, so a lot of good news is already priced into Woolworths. APA, so one of the big themes across the market has been, as US interest rates have pulled back, and as a benchmark, if you look at the 10-year Treasury yields in the US, they were trading around 3.25% only a number of months ago, and now they're back at 2.7%. So the market's really taken out any possibility of US interest rates this year, and as that's happened, yield-sensitive names, which are real estate investment trusts, utilities, they've all done very well. APA Group has been a beneficiary of that. The prices rallied back, filled the price gap, now under sell conditions. And I think that's reflective that for the most part, these utilities and REITs have really probably exhausted this buying demand on this yield trade that I just spoke about them. Woodside Petroleum under buy conditions, I think close to full value here. Don't see too much more upside. Westpac, under sell conditions. We last had the sell signal here at Westpac at $28 and continues to head lower. AGL back up against resistance. I'd spoken about it being good value down here a number of months back at around this $21 level, represents full value, and you want to look at selling covered calls. Aurora, so the packaging business, our preference is still Amcor over Aurora, and I'll chat a bit more to Amcor once we get to that chart. But Aurora, you know, between this sort of three, it's just fair value, so it's not really something that's strongly on our radar there. CBA under sell conditions. So if we look at the history here, we had last had sort of the major top at around this $76, went down, made a fresh low at 64, rallied back up. We've got another Algo sell condition there at around $73, stock trading just below, or it's $69, $70 at the moment. CBA report their full year profit on Wednesday, so the net profit's expected to be somewhere around 9.5 billion, which is just down slightly on the same time last year. But again, the real key around these banks is obviously the impact of this report as it gets handed down. Within these whole travel stocks, whether you look at Qantas, Flight Centre, Webjet, they're all under pressure at the moment. Flight Centre's under buy conditions, whereas Qantas and Webjet's under sell. So let's just keep an eye on Flight Centre. Support there at around $41, but at the moment it seems to be more sort of pressured on the sell side, so we'd wait to see for these short-term indicators to turn positive and see if we get a bit more of an uptrend starting to develop. But you could certainly add Flight Centre to your watch list. National Australia Bank last had a sell signal here at around $28, $29, now trading $23, so still lower low, lower high pattern there in place on NAB. ANZ's the only bank of the major four that is under buy conditions at the moment, so you may want to just sort of pause and have a think about that if you're looking at picking up banking exposure. Then ANZ's our preferred name at the moment. DEXA, so reflective here are these real estate investment trusts that have done very well as US interest rates have come down. So we can see the higher low structure here in DEXA, and it rallied from $9.70 up to $11 odd off the back of that signal. QBE Insurance, I don't mind this coming into the result, although there's no shortage of problems the insurance companies have to deal with, and in QBE's case, it's a global insurance company, but they've started started selling off non-core divisions of QBE globally, and I think that's going to unlock some capital, and we may see them announce a special dividend or a capital return to shareholders of some description in the upcoming result. So I'll continue to update you on the blog with our view here on QBE and as sort of the earnings results come through. But you can see there it's under buy conditions from 950, starting to make a higher high and a higher low formation around this 1070 level, so we don't mind QBE. Seek, look, still on a reasonably high PE, but certainly come back a long way from where it was. So trading about 16 times earnings, and a little like Flight Centre. I think you can add this one to your watch list. It is under buy conditions. Support's developing here at around $16, but it's quite early, and we'd be looking for this short-term indicator to start to turn up a little bit more. But around this $16, I think Seek looks reasonable value to me. And it might be one that you can add a covered call to enhance the return. Now, HealthScope's been one of our high conviction ideas that we've been discussing now for the last 3 months. We've been buyers of it on most of these retracements or pullbacks, and we're just starting to take profit now, given that there's only a few cents left in the spread between where it trades at the moment and the formal takeover offer, which has been recommended by the board at $2.50 a share. Crown, so if we go back 6 months ago when we saw the earnings results for Crown and Star, the stocks rallied off the back of that because of strong VIP gaming revenue. Now, the market's main concern is that there's been a slowdown in VIP gaming. Now, I think that could be a bit overblown, and these results might surprise on the upside again. So via the blog, I'll highlight when we're coming into sort of a week before Crown reporting, a few days before Star reporting. And one of the ideas is to actually buy call options in these names. And that's a way of getting unlimited upside risk, or unlimited upside benefit, I should say, while limiting your downside risk to whatever it is that you've paid for the call option. So look out for blog posts where I describe a bit more about that strategy. Horizon undersell conditions at the moment. I think on a 1 to 3 year outlook, we could start to see this stock develop another higher low formation and a buy signal in the coming sort of quarter. So we'll keep an eye on this, but for the moment, it looks to be under resistance there at 450, maybe looking for a move back down to sort of 410, something. And we'd be at or near that price again. We had been buyers at $4, and then we've either sold calls over it or got out of our exposure there. REA Group, not doing anything there, just highlight that's under buy conditions. Wesfarmers, Target disappointed in the latest earnings result. Woolworths, Bunnings delivered relatively flat growth on the same time last year. So Wesfarmers, to me, is just fair value. Where it is at the moment, you can own it and sell covered calls to drive the extra cash flow. Incitec Pivot's under buy conditions here at the moment, and looking for that to move a little bit higher, looking for it to push back up to maybe 350. Star Entertainment, so same there as the discussion around Crown. I think the VIP, slow down the VIP gaming might be a little bit overdone. It's worth just pointing out that Star's under sell conditions, so as it rallied up, made a lower high here at 566. It's since sold off over $1, and we're looking for the upcoming result to surprise a little bit there on the upside. Non-entertainment not doing there. Car sales under sell conditions. So this is one that I'd spoken about on the blog. Looking at value at $11, now back up near sort of full value. Car sales trades on a pretty reasonable PE, about 16 times earnings on just over a 4% dividend yield. So for a growth name, it's actually a reasonably attractive medium-term sort of valuation. The concern at the moment is that it's had its rebound, it's ran into resistance, and we're looking for a little pullback. If we saw it back under $12 on sort of a market sell-off, we'd be happy to take a look at it again. Goodman, so real estate investment trust, we've seen this rally from 10 to 11.65. It trades on a very high PE for a property trust, only yielding about 3.2%. But the attraction here is that Goodman's focus is on these big online fulfillment centres. So it's seen as a fast growth, well supported, sort of narrow focused business model where globally they're building and leasing out these large fulfillment centres. So Goodman continuing to make high highs, high lows. The index we've already covered. Bank of Queensland, so we can see the scatter of sell signals. We sort of last had the major rollover there at almost $13, rallied back, created the lower high, and then we've got the same pattern here again. So I've put resistance in there at 10.50 and looking for that to struggle below that level. Oil search, so under buy conditions. Oil search probably offers some longer term value that is not recognised by the market at the moment. So my expectation is over the next few months, oil search mainly trades sideways from where it is at the moment. But if you were to take sort of a 1 to 3 year outlook, oil search possibly offers the best growth profile relative to the major, when you look across Santos, Woodside, even Origin, oil search is attractive when compared to to that basket of energy names. So keep an eye on oil search, add that to your watch list. It's had a reasonable rally from 670 up to 770, so I'm expecting it to trade sideways, but it is under buy condition. Cochlear not doing there at the moment. Evolution, I think maybe these gold names are getting a little expensive where they are at the moment. Lendlease, so we're looking for commentary from Lendlease in the upcoming earnings result, where we want to see what the company's strategy is to deal with this engineering division that's had these big cost overruns. So there's about $700, $800 million of cost overruns that they've had in this engineering division, which is mainly the cause behind this sell-off that we see here at the moment. So if we see the company deliver a strategy to maybe spin that division off or sell it, I think you'll see a little bit of a re-rating in Lendlease higher. So it's another name that you could think about buying call options ahead of the result, and that's something that I'll chat about on the blog. Amcor, so this is even though it's been under sell conditions, we've had this on the high conviction buy list. And the reason being is that the Bemis acquisition in the US, which was meant to be done in the March quarter, has now been delayed to the June quarter. But I think that continues to unlock value for Amcor shareholders. It's a material acquisition that Amcor's making. The other sort of tailwind here for Amcor at the moment is you're starting to see some of the input costs with the resins and so on, those prices coming down a little, which helps the margins for Amcor. So we've got a target on sort of reassessing this as it trades over $14. Charter Hall Property Trust, higher high, higher low. It's done very well off that last Algo signal there at around 665. TPG not doing there at the moment, but I will highlight that the structure here is actually starting to look quite positive. So reasonable support building there as a higher low type pattern. Newcrest, we've got this under sell condition, so I see that running into resistance at the moment. Unibail Rodamco, so this is the company that acquired Westfield. The stock got very oversold. There's almost a perfect storm hitting Unibail here with a combination of everything from the riots that were occurring in Paris, a lack of coverage from analysts, domestic shareholders selling URW because they either don't understand it or don't see it as a core holding, fund managers having to get rid of it because it's not part of the index. concerns around slowdown in retail spending. So all those events came together to really hit this stock hard. It trades on about a 7% dividend yield. I see fair value for it back up at around $13.50. Treasury Wines, don't mind this, moving sideways, own it, sell covered calls. Will be interesting to see the upcoming earnings result. The market's looking for confirmation of 20% earnings growth. Computershare, I think, is expensive up here on a 2.5% dividend yield, so we're avoiding that. BHP running into resistance. GPT, so this was a terrific buy signal. So again, real estate investment trust, yield sensitive, had a buy signal here at 480, starting to look full value. So when I look at these utilities and REITs at the moment, I think it's a defensive area to have money invested, but they're close to a valuation where they consolidate and move sideways. So owning them, selling covered calls and stripping out the dividends is the way to play them from where we are at the moment in the cycle. Mirvac, cautious on this name. I think just exposure to residential unit settlements. Tabcorp should surprise on the upside this upcoming earnings result. It is under sell conditions, so selling covered calls is a way to sort of hedge the bet there. But I think Tabcorp should actually deliver an okay result. Cleanaway, under sell conditions at the moment. James Hardie, so we've seen Boral downgrade earnings today, but the sector's pretty oversold. So James Hardie's under algorithm buy conditions at the moment. It reports its results or its third quarter 2019 earnings tomorrow, so it'll be a really interesting result to see what that looks like. It's interesting there's a bit of buying occurring ahead of the result there tomorrow. Stocklands, I think, under resistance, making lower lows, lower highs. Macquarie, I think this is one that you can have a think about. The earnings outlook is still favourable for Macquarie, so that needs to be sort of considered in the context that we've got these sell conditions across the indexes. But I think Macquarie still looks okay to me, where buying it on any dip should be well rewarded. Brambles, close to full value where it is here at the moment. Don't see it trading too much higher. Scentre Group, they've got the share buyback that they're doing. The stock's on about a 5.5% yield. Pretty limited earnings growth, though, only 3 to 4%. Coles, my concern here is the increased capital expenditure that Coles is going to have to undertake to refurbish stores, build these large fulfillment centres. So I see it really mainly trading sideways from where we are at the moment. JB Hi-Fi, not doing there at the present. Orica, just pointing out that that's under sell conditions. Ramsay's under sell conditions. I'll just jump back to Ramsay. Just as it trades now on just over a 3% dividend yield, from a valuation standpoint, Ramsay looks much more attractive than it has over the last 12 months. Sonic Healthcare, under sell conditions. You can see I've lifted this up to sort of this 23.75 level. I think there's room for this to move a little bit higher before it actually runs into resistance. Suncorp, so this looks good coming into the upcoming earnings result. I think the insurance business will deliver better earnings than the market's expecting. So we see value there at Suncorp at around $13. CSL, I think this trades sideways, so even though it's a high-priced stock at almost $200 a share, the company should deliver 10 to 15% earnings growth. Owning it and selling covered calls still is a defensive way to add income to portfolio. Likewise with the ASX, trading on a high PE and only about a 3.5% dividend yield, but owning it and selling tight covered calls. A2 Milk, a little cautious here, so looking for this to actually roll over and these short-term indicators to turn down. I think it trades on too high PE. Cube, not doing there at the moment. Vicinity, so one of the property trusts, thinking that it develops support here at around this 255 level. Aristocrat Leisure. Now, this is a stock that a lot of fund managers own. They're overweight Aristocrat because of its track record of delivering double-digit earnings growth. We've seen price targets as high as $42 from analysts on this name. The PE has contracted, as we've seen in a lot of these growth names that we're trading, 30 times earnings or 25 to 30 times earnings. You've seen a big correction in those valuations, but I do highlight that the stock's under algorithm sell conditions at the moment. But it's hard to actually see it coming back down and taking out that low. It'll be an interesting earnings result to have a look at there. RWC, so just highlighting that it's under buy conditions there at around $4. Magellan, under buy conditions, but not doing there at the moment. Link, again, just point out that a lot of analysts have been upgrading their valuation targets for Link. This is generally an overweight position in a lot of fund managers' portfolio. On a sort of 1 to 3 year outlook, they see earnings supporting much higher valuation at the moment. My issue with it is that it's make lower low, lower high, and it might just be a little bit too early to get aggressive on the long side of that. But again, it'll be an interesting one to have a look at the upcoming earnings result. Ansell, fair valuation, but owning it here and selling covered calls makes sense. Transurban, so example of these interest rate sensitive stocks that have rallied. I think they're mostly now up against resistance. Transurban probably fair values back below $12. Dulux not doing there at the moment. North Star still under buy conditions, but the gold stocks look a bit expensive. Whitehaven Coal, just pointing out that we've now got a lower low, lower high, and it's under sell conditions. South 32 under sell conditions as well. Just jump back and let's have a look at the technical pattern there. So the low's taken out the prior low. We've now got a lower high at around this 350 and a sell condition there. So we'll just keep an eye on that and a bit cautious. I think this sort of anomaly where iron ore prices have rallied off the back of this dam failure in Brazil. The reason why that is that is assume that that takes obviously production out of the market, makes supply tighter, and therefore it's forced prices higher. But it's maybe a bit more of a shorter term anomaly and does not reflective of the slowdown in global growth that we're seeing. So a bit cautious on iron ore really trading too much higher from where we are at the moment. Coca-Cola, so we had the sell condition here at around 870, pushing lower. If we were to see this year Coca-Cola back down at around sort of sub $8 and around 750, we would add that onto our buy list, or at least start to take a closer look at it. Now, ResMed delivered okay earnings growth, but the market was very disappointed with the recent acquisition. So they've made, I think, 3 acquisitions, predominantly within the technology area of the business. And that's weighed on the earnings guidance over the next 12 months. So the company's indicated that those acquisitions will continue to be a negative contribution towards earnings in the market. Given that ResMed was trading almost 30 times earnings on a 1.5% dividend yield, you've seen this big correction. History kind of tells us that whenever these slight misses occur in ResMed, because given that it's a very good long-term growth story, it generally provides a good buying opportunity. It's very hard to know whether sort of the stock has another leg down to sub $12, but the way that I've been approaching this is taking a longer term view on it, buying half of the position here, and then really throughout the middle of or the next 3 months, middle of this year, be willing to add to that position if we see the stock sort of down at that lower band there of around $11. But I think if we were to take a long-term view and just simply say accumulating ResMed over the course of the next 6 months should actually deliver good returns, into next year. So we'll just add that to your watch list, and I think that's one that we'll continue to revisit over the course of this year. Zero not doing there at the moment. Rio, as I said, with the iron ore stocks, I think they're bumping up against resistance now, and if the index pulls back, that might be an area where we see some weakness. So slightly softer numbers in the traffic data through Sydney airports, which has weighed on the stock price. We've seen analysts downgrade Sydney Airports only by a penny or two. I think the stock's actually reasonable value, but we actually had lower low, lower high formation and sell conditions there at around 725. Which was an opportunity to sell covered calls. CYB, they have an earnings update on Wednesday this week, so they have their Q1 sales and revenue release. You may recall this is Clydesdale, who acquired Virgin Money in the UK. I suspect that as we start to see Virgin Money integrated more into CYB, we should begin to see some more positive comments out of the company around future earnings growth. So we did have the sell condition here at around 350. But let's have a close look at these earnings results on Wednesday. I really get the sense that there's actually some value on offer there in CYB. AMP not doing there at the moment, nor in IOOF. Boral, disappointed, downgraded earnings today, and then there we are back to Wally's. So I'll just bring into screen the notes. Well, actually, let's do a couple of things here. Earnings calendar first. So this is where we are at the moment. James Hardie reports tomorrow, CBA on Wednesday, CYB on Wednesday, Dexus, which will be an interesting one in the Properties Trust, IAG, which I quite like, so we're expecting that result to at least meet market expectations, and we're running a covered call strategy on that. On Thursday, AGL reports. I think that's at fair value at around $21, $22. Downer EDI reports on Thursday, looking for that to run into resistance around that 730, 750 level. MGR, a bit cautious on that. So I spoke about the concerns around settlements within that residential property space. And then into Friday, we got NAB providing a trading update. News Corp, which don't expect too much positivity out of that earnings result. REA Group, we'll keep an eye on that. Amcor on Monday will be a key result. AZJ, I think, will just come in line with expectation. Bendigo may disappoint. GPT will come in line and support the current share price. JB Hi-Fi, will watch that one with interest for the strength of consumer spending. Macquarie has an operational briefing on Tuesday. I think the story there with future earnings growth supports the Macquarie valuation, and we want to be buyers of that on the dip. Transurban, I think, comes in line with expectations. Wednesday, we got car. So this is next week. We got car sales reporting, which will be an interesting one. Computershare, I think, is too expensive. CSL supports the price, and that's a buy, right? Tabcorp next Wednesday, so that'll certainly be an interesting result. They merged with Tats Group, I guess almost 12 months ago. So look for sort of more commentary around the cost savings there. AMP, very messy. ASX will meet market expectations. Evolution probably will come in, above last year, but a lot of the good news is already priced in there. S32, that'll be interesting given sort of the technical pattern we looked at there today with it under sell conditions. Suncorp, I think, will be better than the market expects. Telstra, the expectations are so low there that may surprise. Treasury Wines, fairly high expectations there of 20+% earnings growth. Woodside, Link, so we'll keep an eye on that one. That's the one that I spoke about where a lot of analysts have sort of higher valuations on that. So there's expectations that result will do better than the market's expecting. Medibank Private, flat. Origin surprises to the upside, so that'll be a key result to have a look at, and that might be another one we can buy call options ahead of the result, and that'll do. So obviously we'll have another webinar before we get any further into the earnings calendar, but over the next 3 weeks we've got a pretty busy calendar of earnings results coming up that we'll focus on the blog. Okay, so when I send out the recording today, there'll be a link at the bottom of it which will go to these notes, and we'll continue to flesh these out, but we're looking at it from a high conviction standpoint. Healthscope's pretty much played out, and there's not much left on the table there. Origin, I think, as I've discussed there's a good opportunity there. Likewise with Amcor, likewise with Suncorp. Ansell, not sure that it belongs on the high conviction list, but this is really just an income line, owning it and selling tight covered calls. The highlight is that the XJOs under sell conditions, and so are the major US indices. We start to build out some short positions because of that. If we go through the general notes, CIMIC I like, Woolworths I like, but on a high PE, Woodside, Oil Search. So generally these energy names, IAG on support, Seek on support, Sonic, it's an income buy it, sell covered calls. QBE, we'll watch the upcoming earnings result with interest. These growth names, Aristocrat, I spent a bit of time on that. Seek, I don't mind, $16 support. Flight Centre maybe on support. Car and Aristocrat, whilst we like them, we're just acknowledging that they're under sell conditions at the moment. These building stocks, James Hardie tomorrow will be a key one to have a look at. So keep an eye on the link. You can maybe save the link so when I continue to update these notes, you can come back and review them. Thank you for listening in, and if you would like to take advantage of the special offer we've got where you can become a subscriber to the technology that I displayed today, please call the office using the details on screen.